everybody, welcome back. My name is Mike Fairborn, and great to have you here for Markets and Sectors. There is the bell. I can hear it in my ear. We're just closing the day, so we've shifted an hour later than we normally have this discussion. But so it is great to have you all here, folks. Today, I want to take a look at a few things. Made some comments earlier the week about the CPI. Curious what would happen with the CPI in terms of if those numbers continue to peel back a little bit, showing an improvement in terms of lower inflation in that sense. We did get some of that. There's some other details I want to talk about today. Particularly, I wanted to look at some macro themes out there that might be developing. Those can always be interesting longer-term drivers for different sort of stock setups or whatever we might be looking at, maybe ETFs on certain sectors or industries as well. So I'll look forward to going into that into more detail with you for sure, but would like to welcome you all here with us today. We've got Thea, Vic, Wife of the Fast Lane, Jay Richardson. How's it going, guys? Great to have you back up board. We've got Andrew. Welcome, Andrew, as well as David, Greg, Wrong, Will, and Chex Mix. Awesome. Well, hey, I'm joined in the chat by a good friend, colleague of mine, Mr. Cameron May. Turns out Cam is on a few of my chats, and it's great to have him here. It's a privilege to have Cam on board. Teaches some great classes I'm sure you're well aware of. And by the way, you can follow Cam on X, Cameron May, CS, Mike Fairborn, CS. Just make sure you get that CS at the end of the correct spelling of our name if you want to get to our correct X followings. There's some creativity out there about changing a letter in our name just for some Twitter accounts or X accounts that are basically imposter accounts. Anyhow, with that, great to have you on board. Looking forward to diving into this with some macro themes as well as some discussion on some interesting components of volume amongst our other discussions that we have. So with that, folks, let's dive into some disclosures here. Information here is for general information purposes only. The Paper Money software platform. That too is for educational purposes only as well. Now, investing does involve risk, including for some products more than your initial investment. And you can see a little segment there on futures and futures options. We don't place trades on futures and futures options, but we do take a look at the charts and get a sense of what's going on there because, we get volume and a few other details to take a look at. So some statements on futures and futures options, as well as past performance is no guarantee future results. We did get some new stacks data that was released, so I want to review that with you today for sure. It says down there below too, historical data should not be used alone when making investment decisions. The Stacks index is not a tradable index. In fact, the Stacks should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. So with that, let's go ahead and take a look at, let's see what we've got over here, starting off with the S&P 500 index. Just broadly speaking, a couple of key notes to kind of take a look at. As you can see, us sort of inching higher. And what we had used previously, we talked a little bit about this last week, is the volume profile. Folks, this is not a 9-month. This is over a full year now. We've had so much volume that's even come in at these recent levels. You can see point of control. That is the biggest volume over the past 1 year has come in at that price range right there. It's an interesting area to keep an eye on because we have a spike here, but also look at this sort of plateau. This whole range is really quite, heavy in terms of volume where it dies off and prices could move quickly here, or maybe below one of these points, it could move a little bit quicker to the downside. But it could suggest that we might see some consolidation here. Remember, the last time we were in this range, did we get consolidation? Well, you guys tell me. I would say, I'm going to go ahead and just put a big Y over there. A big Y for yes, we did get consolidation. In fact, we held here. Ready for this? Basically 1 month, 2 months, 3 months, and darn near 4 months. 4 months, that's a semester in my book. You get 3 of those a year. That was a long time. We might be back into that range. We don't know. There can just be a lot of congestion within volume. Now, one thing I wanted to state on here is we do look at SPX because there is a volume indication. Did you know that? Not day to day, not as it's coming out, but we are getting an indication of volume on the SPX. I found this out this week as I was looking for something just like this, and it's a big long symbol, but I'm going to throw that symbol in for you. Let's go full screen as well. Let me just throw this into the chat box so you have this. It's one that I just had not used previously. But here it is right there, and as it states right there, S&P 500 composite total volume. We get total volume at the end of the day. And the day is up now. So let's just take a look and see what we're getting over here. Now, just generally, where are we at in the scale for this year? So here's 2025. So we got 2025. Where are we in terms of volume? You could say, well, there might be, I'm just going to kind of scoot my head for a little bit. There's going to be a little bit of volume here, kind of in this range. I'm just looking for where there's a lot of volume that came in. Obviously, April tariffs, think about it, there was a lot of volume there. But then notice over here, we started to shrink. And this is really, if I'm looking at average sort of a volume over a range, folks, average volume, that's the lowest we've had this year. And if we look really, really close at this, you can see that volume has been slightly ticking down. Now, let's compare and contrast that with exactly what we were just looking at previously, and that's the S&P 500. Keeping this in mind, just using S&P 500 index data, SPX now. You guys got that in the chat, right? There it is. It's a very fascinating one to take a look at. But there you have it right there. Lighter overall volume, pretty much in this range here for the year. And as of recently, what have we been getting? A downward tick in the total volume as well. And that's interesting because that's, we're still near that, very close to that 6,000 level. It's a big round number. We know that that's basically the point of control over the last 1 year, and we're not getting a lot of volume. That's fascinating because we don't know what exactly that entails. Normally, you like to see volume building as prices are going higher. In this case, folks, we are in fact getting it weakening as prices are going up. That, all else equal, is something to keep an eye on. It could be a warning sign. It doesn't have to be. We're kind of coming into what's historically been termed as, I've heard it termed as the dog days of summer or the summer doldrums, in terms of we do get a little bit of slowing in market activity June, July, maybe early August a little bit, and that could be coming into play if that's resurfacing. So that's something to keep an eye on. I mean, just to be mindful of. But generally, you'd want to see volume sort of strengthening at this point in time. So that's just an interesting point. We're seeing some interesting volume indications just broadly in the market as well. Did a discussion yesterday in the class on swing trading, and we looked at a few different things. In fact, this is one I threw out today. If I go, look at this. If I go HD, yeah, Home Depot. Home Depot has this, it's trading or was trading today or has been right near its point of control. Look at this. There's the possibility of a sharp move if you get above that level, or a sharp move if you get below that level, because that volume profile is waning. It's edging off a little bit. We talked a lot about this and yesterday in my class, as well as the money flow, because volume can be an interesting predictor. It can be a leading indicator of volume sort of indications out there. This is one of the companies we did sort of a swing trade on. We looked at this as the possibility of a longer term flag pattern, possibly. It's really quite long, and a lot of times we're just looking at maybe a 3 to 14 day move. I thought I'd throw this out here to you because if you'll notice over here, let's do this. This is our another read on volume, which is the money flow. Do you guys see anything interesting about this? Take a look at this. Look at money flow relative to price action, and you might be seeing that maybe you're still seeing possible buildup in terms of strength as it relates to potential buyers picking up more shares as opposed to sellers. I put a little X post out on this right now, and I wanted everybody to kind of take a look at it because it is interesting what you might be getting here. And I'm seeing this, Walmart is somewhat similar, maybe not as strong as some of these other ones in terms of just volume indications. If you want to take a look at this a little bit further, I'd be curious to see what you guys see on this. But this is what really we kind of looked at and kind of discovered, but there is that X post on it right there. I'll just put this in here if you want to check it out. Just a little highlight for you. But I noticed that it's coming in terms of volume as well. We're seeing different parts of the S&P 500 showing strength, and other parts are kind of waning off a little bit. So with that, I want to move into some other markets here. There is the NDX. You'll notice something interesting about the NDX here. Where's it trading at? It's actually had such a more powerful move, right, than the S&P 500. It's actually had such a more powerful move, right, than the S&P 500, at least off these tariff kind of bottoms, these lows here. Look at that move. And we are where? Well, can we call that a round number? I guess we technically could. It's a big round number, 22,000, and we're right there. We hit it today. So we touched off that level, very close to this level, clearly this level, and here we are again. We traded up through that level. In fact, you can see the high right there again today. So we've come up there, and a lot of times when you're reaching those longer term levels and a volume is kind of waning in some areas, well, that's resistance. And if volume is getting stronger, maybe some of the defensive type sectors, something to keep a watch on. Clearly, I mean, you want to keep an eye on it because we've been talking about some of the rotations that can occur. This could be a rotation. I'm going to jump right into it now. Let's just look at our sector grid right here, which is a good reference for us on the S&P 500, and we'll take it from there. But I would like to welcome the rest of you joining us. Mighty Mouse, we've got Zinc, we got Hack, we've got Justin's. Hello to you, Riceberg. Great to have you back on board, as well as Tommy and others, folks. But there you are. Okay, so let's do this. I like to go over here and just get every bit of room we can here. I like to detach it a lot of times and just expand it up even bigger so you can see each one of these. Now, we're looking at maybe some ranges. We've been looking at Infotech being quite strong, but the concern here, possibly, we'll see. There are some strong areas in Infotech still, obviously, or technology, but see the rounding a little bit? Communication services, stronger, not as much as that rounding right there. Financials, we're just sort of flattening out here. Normally, you might have seen maybe a bull flag spike by now if it was going to spike, but we're just kind of flattening out. On the flip side, over here, we're looking at consumer staples. We did break above some highs here. There's your high, and look at the pullback. Possible flag pattern. Hit a few of those in that class yesterday, so I don't know. There could be a rotation if, in fact, say, for example, we just looked at it, folks. The NDX, the NASDAQ, hitting highs at resistance. We've got some other things to look at for sure in that regard, specifically with the S&P. But could it round? Could it pause for a little bit? Could some of these other groups kind of bounce up from that point? That's really kind of the question. The other group that has been known also to be historically defensive is healthcare. You can see over here, I'm going to try to draw this. I've had some success in doing this. My mouse doesn't slide, but there you go right there. Can you see us breaking that long-term downward sloping trend line that was really right around really kind of the end of February, first part of March? First time we're getting a bounce right there, which is interesting because it's also a defensive play. We're just seeing some signs that there could be a possible rotation that could be kind of getting positioned for the move. Now, the last one that might fit there too, that's defensive to a degree, would be utilities. Sometimes it can be seen that way. Look at this long-term break. You draw it along the highs, resting near those highs right now in the form of a possible flag pattern here too. So seeing some interesting developments there, whereas maybe some of the others could be rounding a little bit. What's interesting is industrials, which had a nice run. It's kind of flattening out, but is it rounding or not? We don't know. We'll keep a watch on it for sure. Okay, wanted to break this down a little bit more and just see what has been moving more recently in consumer staples. Seeing what is strong relative to what's weak. We like to do that by just using these great tools. In the scan tab, for example, I'm going to scan it. I'm going to use specifically materials. We're going to look at the entire basket of industries within materials and just see what's strongest. I'm sorry, not materials, but consumer staples, and seeing what's strongest there. Let's go down here and let's just take a quick peek. There are, that's the, let's see, so the S&P 500, so all the companies in the S&P 500 by industry, there are the consumer staples. We're going to look at all of the industries. Of course, there are sub-industries in each of these too, but here's the industry list, consumer staples, S&P 500. There you go. Now, 5-day percent change could be interesting. We'll pull that right over here. I'm just going to set it up right next to our number here. Well, this could be interesting too. Now you get the sub-industry list, but let's just kind of highlight this. Those are the losers. J.M. Smuckers got slammed, got smucked yesterday. A big gap down. It was huge too. SJM, I don't think that was on anybody's radar to that degree, and I don't even know exactly what happened there. SJM, but you want to see it because that's a doozy. In fact, I'm sure it was a guidance issue. Beat expectations, so it must have been guidance on something that, yeah, there it is. Weak fiscal guidance right there. Lower the price target. I don't know. Now, oh my gosh, look at all the brokerage firms. There's at least a half a dozen there that lowered the price target there. So that is that's a move outside of the normal range. In fact, I just have to see this, folks. What is the beta on this? 31. It's a third the beta of the S&P 500. S&P 500 being a 1. That's just such a remarkable. That's interesting to see that one right there, though. Let's go ahead and flip this guy around. And by the way, this PCT 5-day change is a new indicator, clearly a newer indicator. We can click on customize. All you want to do is go over here and just do PCT. You guys have these at your fingertips. There's a 1 month, 5-day, 6 month, etc. That's all I'm using. But here we go. These are some of them that have been holding up a little bit better. DLTR, Target, ADM, Cisco. That's the other Cisco, right? The food distributor. But remember, many of these might have been pulling back the last 5 days. I'm just looking at strength of the last 5 days, and sometimes these are the leaders. This is how you can use a percent change in this fashion. 5 days right there. Okay, sometimes the strongest that have been performing the strongest as we've been having a flag pattern, the other ones might be positioned well too, because remember the whole sector is sort of flagging. It's in a possible flag. So what's the strongest in there? And basically what we're looking at is we know behind the scenes there's a flag here collectively as the group. And now we're saying what has really been moving up the most. And so if the sector starts to flag and we get it to kick in gear and go higher, oftentimes, not every time, nothing's in every time, but oftentimes the strongest in the group might be the first out of the gates. Let me just kind of highlight that one more time over here. Back into our, here it is. There it is, because I detached it. So here are the consumer staples. What do you guys see? Last 5 days, 1, 2, 3, 4, 5, down, down, down. In fact, that was really the key portion of the potential flag in here, right? Breaking highs, flagging back, possibly ready to move higher. Because remember, we're just looking collectively. These are S&P 500 stocks. We just pulled those up in the scan tab, but it's been pulling down in that flag formation. Yet these guys have been stronger. And now you know which ones they are, and those can be looked at. Let's just minimize this, and we'll get back to it. So there they are, right at your fingertips. This is where the strength has been. I want to see SYY. Okay, up about 2.5% over the past 5 days. The other Cisco. Okay. Well, I don't know. I look at a lot of price patterns, but there you go. There's sort of a possible cup and handle pattern, certainly strength. So the whole thing here is if the sector starts to rotate and we start to bust higher and break out, could these guys maybe do a little flag and get going in here? I'd say that's pretty conceivable. I mean, it could happen, right? So that's the real question. Can we break above there? And this is what I'm going to do. I'm going to take advantage of another tool, because in this class we do a lot of top-down analysis. But if I'm just going to go over here, I'm just going to right-click and say, let me know. I right-clicked, create an alert here, and let me know if this macro theme might in fact be unfolding. Question mark. Okay, and maybe you just put some other keywords in there. Staples, consumer staples. Okay. Do you guys use this frequently? I'm just curious. I think many of you probably do. I've had, like I've said, I've had alerts in here on certain breakouts that are very similar to this. I had one that was almost 3 years. It was a weekly breakout, right? A long-term one. It broke out. You mean I hadn't been checking that thing for months, and I got a notification within, normally it's about 3 to 5 seconds. And so those are good eyes on the market when you're waiting for a breakout. Because remember, that price action on longer term breakouts can mean an indication that something has possibly fundamentally changed out there in the market. I mean, if you're going to take out long levels, long term levels of fundamental value lines, where's that value line? If we're breaking that out, breaking above that on a long term basis, it can tell us a lot about the company, it can tell us a lot about the industry. So we're kind of reverse engineering that a little bit here, but you guys, it's right there. We can tap into that. Riceberg does have a long-term one sometimes. I'm curious about this. I'm going to type in just a question into the poll. This is going to be helpful too, because I think I'm going to be able to kind of structure some of our classes based upon the answer you guys are going to provide here. And I'm going to do this. Okay, so we're going to say, um, now I could have had this all written out, but I just thought of this now. Well, not exactly, but this was an idea, but okay. So I've added it. I'm going to start the poll right now. I'm going to change one word because once I send that through, man, it's set in stone, right? Okay, so there we go. I just sent that out because I want to get, especially in this class where we do some top-down trading examples pretty frequently in this class. In fact, we're going to do more. We're going to do them every single week. But I just want to know what your general time frame is for investing. So I'm assuming I put trading in there too, but we're maybe a little bit longer term. If you're less than a month, by the way, because I put a month to 3 months. If you're less than a month, just go ahead and use that very first one I had, 1 to 3 months, just so I have a general idea. So that would kind of be a bigger category, okay? Because here's the thing, and this is interesting. I'm going to give it a little bit more time, and I appreciate you guys voting if that, because it just gives me a better sense. More numbers. It's kind of it's more interesting. But if you are, what happens in the market if we're 3+ months into the future? What does that do? 3+ months. What does that mean? If our investing time frame is over 3 months. Any thoughts on that? It's there's a distinction here for sure. Because for sure it means we're going to be holding through earnings. And that means if we're holding that long, we probably have some thoughts on what earnings are going to be doing too. What are earnings going to look like specifically? Are they going to be good? If we're holding over that 3 month time frame, yeah, we might want to know that. We might want to know. Okay, that's probably pretty good on our poll. So I'm just hop back to this and we'll finish it off there. And there you go. I know it started off a little bit higher. Let's see how many votes we got on this one. Okay, good. Thanks for voting on that all. And we'll end that poll and see what our numbers are in total. There it is. Okay, cool. We got 36 votes. Awesome. They say the bare minimum for, let's see, voting, a statistical measure on it, or mu, is 30 votes. So we nailed it. We're above that. So there you go. 3 to 6 months. Okay, so it's normally shorter term or longer term, not too much intermediate term. Okay, cool. Good enough. Even if we add the 6 month or the 3 to 6 months or more, we don't have anything near the 1 to 3 months. So that's very, very good to know. We'll focus more. We'll focus, definitely on. We'll focus across the board because we still have folks on both sides. But that is a good thing to know. Thank you for giving us that. I think it's, by the way, very important to know what the time frame is. Just, if nothing else, what I mentioned to you guys right there. If you're over 3 months, you probably want to have a really good idea of what's happening fundamentally, because that tells me you're going to be holding through an earnings announcement. There we go. All right. I wanted to see what the weekly looked like on this real quick before we're moving on, but we're going to be moving on real quick. And there you go. So Cisco, for example, one that's been performing well, and there's been several in there that you guys can tap into, has kind of found some support in here, but really kind of long-term consolidation. A lot of these staples are known for their dividends. Again, dividends can be cut at any time, but you'll find some of the longer term, many of, let's say, the dividend aristocrats that have raised for 25 plus years, they're right in the staples area. Many of them. All right. Well, that's good on that, but I wanted to hit it. There are some interesting things. Real quick note too on market analysis before we hit our other market indicators. As I mentioned to you, the stacks is back. We got a new read on the stacks, and it has been bearish for a while. Let's just see where it comes in at now. Okay, so it's still showing continued weakness here. Continued weakness with the stacks. In other words, you'll notice that that weakness over here has been there for a little bit. Below, this is the stacks, right? This is the stacks relative to the market. We've got the S&P 500, and then we've got the stacks. Let me just clarify one thing just to make sure. Yeah, SPX, stacks index. Where did we kind of break down? You know, we never came back after 2022 in the markets. We never really came back. When I say we, I would say a lot of investors. 2022, that sell-off in the markets went higher. You know, we were up. I mean, in 2020, 2021, even ahead of schedule, really, according to the market. But if you look at a large basket of retail investors, what are we seeing in here? Negative divergence. In fact, what's interesting here is this was a high. This was a higher high. And even in this smaller sloping run, we still got a lower high right there. Negative divergence on top of negative divergence. And that was a hint, by the way. That's a hint over here. I'm just curious if anybody spots this, but on that X post I did, I put into the chat on Mondelez. Think about double negative divergence. That's a lot of indications, but now we're seeing it in terms of price. Again, the stacks index, you can scroll down here. There's a lot of great info in here. In fact, this is where I'm going to be heading into some of these areas for NVIDIA and some other things too, but look down here with me. You can go at the very bottom, and it just says, what is the stacks index? And it does say, hey, the stacks is a proprietary behavior-based index that is designed to indicate the sentiment of individual investors' portfolios by measuring what investors have actually been doing. Okay, it does this by analyzing aggregated data, including holdings and positions and trading activity amongst a sample of our many millions of funded retail client accounts. Here's that link on the stacks. It's always been an interesting read, but like I said, it's been negative divergence-wise compared to the market or negative strength for quite some time. But here you go. There is the stacks right there. Okay, just threw that into the chat for you. Fellow Typer says, it seems all classes this year is geared towards the swing or day traders. Wish your generating income class last year comes back. Oh, okay. Yeah, that was a fun class. It was a bit longer term too. This class, though, Long Snapper, is going to kind of be in regards to that too, because we're going to be looking at macro themes. In fact, we're going to switch real quick into that area right now, and then we'll hit our market analysis at the end. Remember this company? We talked about it. We've been seeing some of the macro themes. This was tied into tariffs, potential tariffs, manufacturing coming back to the U.S., and that benefiting U.S. manufacturers. Now, CAT is clearly in more of the area of, let's just say, construction equipment. John Deere would be, well, farming. And there's kind of the breakout that we've been talking about. We looked at it, and it's breaking out right now. Will it continue higher? That's the question. But you can see that it's showing some strength there. Deere, which we did actually have a position on to kind of review a position, it broke last week. It broke above our trend line. It's still just kind of going a little bit flat in here. Not doing too much. In fact, we have 25 shares. It's up $188. This is just a paper money trade, but I wanted to throw that in there so you guys could see it. But yeah, so that's kind of a macro theme that we're trading. This could be a longer term trade. In fact, this could be a longer term sort of a, it's clearly outside of the swing trade time frame. You can have flag patterns that are outside swing trade time frames. This could be one of those. This flag ran up. I mean, the pole of the flag ran up about a month and a half. That's longer than the 3 to 10 days we normally look at in our swing trade class. But there you go. I mean, I don't know if it'd go in that direction. That's a different slope. But I'm just saying, over the time frame, it might be that long. So we don't know. But I just want to show you CAT is in there as well, which could be interesting. These are both expensive companies, but we could put, they're two different ones, but we could still put just like a 25 or 50 share position on this one as well, just to track it long term and see, because look at the extent of maybe this flag pattern here too. I already put one on actually in the swing trade class. You can see what it's doing on the breakout, but I just wanted to show, well, should we just keep this same position? We've got one, I put one on both as a possible longer term theme, because when these run, they can really run too. I mean, well, they just can be longer. They don't have to run big, don't get me wrong, but they'd have longer term kind of cycles. Like, here's my case in point. When it runs, I mean, it can kind of run. That's not it. This is CAT though, right there. See these moves over here? I mean, that's several months of an upward move, and still several weeks to months going higher. We don't know if we'll get another one up here that maybe comes up here towards prior highs. I'm getting kind of out of my range right now, but I still want to, in this class, narrow it down to maybe some of these macro themes that might be benefiting from other areas. This is really one of the strongest sectors within the industrials, by the way. All right, well, let's do this. In technology as well, we are seeing possible strength in technology. And here, there has been another macro theme developing. I'm going to pull them up right now and just show you how quick we can do this, because we're still in the S&P 500. Look at this. I'm just going to scoot on down to industry, information tech. There it is on top. Let's just scan it. Okay, so 69 companies. Let's get them all in here. 69 companies that make up the technology group in the S&P 500. Okay, I clicked on share results. It's still not popping up. I don't know why exactly, but anyhow, that's weird. Okay, don't know. Let me just try this. Let's do it for the NASDAQ and see if that pops up. I mean, I know why. It's because I'm presenting. And when I'm presenting in front of people, it likes to do this a lot. Okay, but here's the thing. Technology's been moving quite a bit, and there are some companies, I'm just going to throw out a few of these. SMCI, semiconductors. Okay, it had been down for a while, and now what we're looking at it here. There's been sort of a discussion on these groups that have tied into other areas where, like during the gold mines, right? The people that made the money are kind of the picks and the shovels. This is kind of the picks and the shovels behind AI, is what a lot of analysts are talking about. A lot of researchers, they're saying this is going to kind of be, the tool to enhance AI going forward. And I don't know if you remember this, but it was about, gosh darn, time's going fast. It was about a month ago that Saudi Arabia had agreed to some certain several billion-dollar investment in two companies, AMD, thinking long-term here, AMD and NVIDIA, NVDA. So think in terms of picks and shovels. What could be driving it going forward? Now, we look over here, NVIDIA, clearly maybe the leader, but maybe up towards resistance right now. That doesn't mean but there's a look at long-term NVIDIA. It doesn't mean it can't go higher or lower, but let's just compare these with these first two. SMCI, now think in terms of value. Look how low we are here in terms of value. How about AMD? It's tailed off quite a bit. Now, the two that I know Saudi Arabia did make agreements with were AMD and NVIDIA, because they're really building out. They're trying to get away from like oil and get into, AI. And they've made some huge advancements there, but these are big investments in these companies. So anyways, if we come back here and take a look at this, are you guys seeing anything early on. Now I've drawn this downward sloping trend line, which could represent a change in trend. If I come over here, I start looking at maybe some support and resistance levels. Oh, we took that one out. We took out the prior high, but we're still kind of sitting in here right now. Now, I will say from the RSI, there's a little bit of weakness over here. And coming down here, the money flow is actually looking pretty good. Taking a look at money flow range, let's pull it up right now, right off the bottoms, and take a look. So here we go. Here's money flow. Did we cross above this high yet? This is the last money flow relative high. We didn't. So collectively, money flow is telling us, it's telling us that according to money flow, we've had enough volume over here. Somebody's buying. I mean, generally, this is what money flow is telling us. And it's also been referred to as a smart money indicator. But there's more collective volume relative to sales volume, more buying relative to selling that might be pushing us up. And money flow says, hey, this is a warning. This is saying we might come up to this level at least because we've got enough volume to get us up to that point already. That's called a positive divergence relative to money flow. So, we're just looking at other indicators that might help to justify a macro theme. I mean, if money's coming in, that's probably a really good indication too. But, here's kind of a scenario here. On AMD. Now, what we could do, because it's already run up a little bit, and maybe it'll consolidate, we could wait and see. I'm going to do this. I'm going to say there was a prior high over here that represents roughly a 50% pullback over here, but this could be a longer term run. If I click right here, right click, create an alert, and I just said, support or something like this, question mark, text me, let me know when it hits that level. That could be interesting. In the meantime, what if we wanted to try to get a position going here? Well, we could add a little bit to our trade, but we don't necessarily have to. I mean, we could add a small portion, or we could just wait to see what happens at this level. Sometimes prices might just simply flatten out right there. So this is one I am going to add a paper money position on, trade on, if in fact it does unfold. It's going to be all about the shovel and pick for AI relative to, shovel and pick, the theme on gold mines. Okay. Yeah. And Jay Richardson, yeah, it looks like an upward sloping. It does. It really does. I think it's a great catch. See this? He's stating here, or she's stating, I don't know. Oh, looks like Jay Richardson is a man. Okay. Shoulder, head, shoulder, higher shoulder. Is a higher shoulder bad? No. A higher shoulder could be a real positive. One of the reasons is you might be getting a higher shoulder because guess what you did over here? You took out the high. So that the higher low, therefore, is just a higher point. It's all else equal a positive, folks. That could be a positive. That's why I put that there. It could be. Okay? And also, Jay Richardson, and you guys have seen this, I know you love your cup and handles. I think you do. I think many of you do. It's not the most beautiful rounded bottom, but that's okay. It's still a high. You can break that cup and handle down into kind of a rounded bottom, a bull flag, and of course collectively, a cup and handle. There are a few things that make up that cup and handle pattern that really make it actually quite popular. They do. All right. If you guys are finding value from our discussion here, smash that like button. Lets me know this is along the lines of what you guys like to look for. We're going to finish up here with our standard discussions in the market, which we generally tend to go through pretty quick. You guys are getting good at that, but we want to take a look and see what else is going on. Be sure to subscribe as well. I don't think we had a survey link out there today. Cam would have posted it. Had we done it? I'm not seeing a single thing. So I think we're good there. Let's finish up with our market review, but I like to go through it every week, review our trades, top-down trades, as well as potential macro themes driving the market out there. Okay, so here it is. Let's our market sector review. Let's take a look at it right now. We got very, very close. Did we hit below the 100 here? The minus 100? Technically, we got close. We got minus 90. So Mr. McClellan might have said, Tom McClellan might have said, hey, that's close enough. Maybe you get a 2 to 3 week rally. Perhaps that's what we got. Okay. We saw a really interesting indication, though. We did see advancers and decliners on the NYSE go up, relatively speaking. And that all else equal to could be construed as a positive as well, because that's where you're getting breadth of the larger market, 2,700 stocks in that in the NYSE plus, 2,700 plus, I should say, out there. All right, how are we doing on the equal weight? Well, equal weight takes us up to these highs over here, as you can see. So not a ton going on there up to prior highs, but hey, it's weaker than the market. So collectively, the breadth isn't there. We didn't get a breakout. That would be one indication. The next indication, how about real issues? Well, no omen spikes. That at all else equal is a positive, especially over the possibility of a lower high move right there, especially that. Okay. All right. Let's continue on here with this very, very little movement in the new highs. So this big pullback here was so steep. We just haven't had too many companies in the S&P 500 or the NYSE that have been making 52-week new highs yet. So, you're not really going to get that until you really start trending up a little bit, but it is somewhat of a sign of weakness. Now, seasonality, notice how we popped kind of back into seasonality because, 10 years, 20 years, I've seen 50 years look very, very similar to this. We're behind kind of normal performance on the year, but we're dang close relative to where we were down here. I mean, on average, we were up 2.3% in April. During this year, we were down 14.5%, 15 right at the lows, right around 15. Look where we're at now, 2.7 relative to 4.93. Wow, what a recovery. Maybe we'll get something similar towards the end of the year, is the way that some traders will use that seasonality. There's our longer term, remember that long term volume profile right around 6,000. We've been holding above it. Now, if we start to see this using more data on a 30-minute chart, more data, if we break down here and start showing, I don't know, negative price patterns, negative price data, that could be a serious warning sign. For, maybe the possibility that, well, when I say serious, all I mean to say is it could spill over into the larger time frame. And what would that larger time frame be? Daily. Serious was not the right word. Could spill over to a larger time frame, and that could be the rotation that we're talking about. That was part of our discussion today into consumer staples. Watch that, because there could be a flag out there. We discussed that today. We also looked at some of those areas too. Semiconductors and AI infrastructure, right? SMCI, AMD, NVIDIA, the picks and shovels for the 2020 gold rush, so to speak, just AI. That's kind of one of the macro themes out there. But folks, utilize this information. Hopefully you found this informative and helpful. That's the idea of this entire discussion. It was great being here with you today. Thank you so much, Cam, for your help as always in the chat. And by the way, it's great to see all of you here. Love to see the back and forth commentary. And I appreciate you participating in the polls. It's always good to be thinking too of the different time frames, but that gave me a really good idea of where we might be in this class. But I'll look forward to future discussions with you folks. Have a great rest of the day. See you next time.